A 2% increase in New Zealand's GDP was recorded in the September period, which was higher than the forecasted increase, in fact, pretty much double. Sky News New Zealand Bureau Chief Ms Maggio joins us live from Wellington. Jessica, it's a positive sign for the economy. What was behind the growth?
That's right, Ingrid. It really surpassed expectations from what economists here in New Zealand were predicting at 0.9%. As you say, that's almost or more than doubling. So New Zealand statistics today said that the annual growth was at 2.7% for the GDP, but the September quarter, as you mentioned, up 2%. And what they say that is largely due to is the services industry. So one-off drivers, they were really key here this quarter. Transport, postal and warehousing industry, that also soared 9.7%. And what we really need to remember is that in the September quarter, the international borders reopened, which meant that all arrivals could now start coming back to New Zealand. So that would have seen international and domestic tourism a big increase on spending, and that would have really seen the growth there for this quarter. Now, of course, construction was also up there, up 5.1%, largely due to residential and non-residential building, but also in part due to investment in infrastructure. Dairy and meat exports also saw some higher recovery, so that's really good news. And household and government consumption was down a little bit. So there is some of that easing that's going on now heading into 2023.
And Jess, what's next year looking like for New Zealand's economy then?
Well, so what this data release this morning has shown is that bounce back, that rebound from last year's lockdown, especially following that 1.7% lift in the June quarter. But banks have been describing it here as stupendously strong. So a sign that the economy really is resilient. But what that could also mean is that rates will be even bigger. They'll be hiked up in February when the Reserve Bank of New Zealand delivers its first official cash rate of 2023. So that might mean some higher inflation, some higher rates there. New Zealand is definitely heading into recession, and it's likely to happen into the second half of next year. And the Reserve Bank of New Zealand Governor Adrian Orr has actually said, he's basically admitted that that was what he referred to as deliberate engineering of recession to slow spending and to bring that inflation back down. Famously, in November, it was raised 75 basis points, the OCR, but he had said that he was even considering a 100 basis point rise. So he's standing by that. He's really being quite adamant about it, and he confirmed that yesterday in the annual review.
Our commitment to getting inflation back to the 1 to 3% inflation range. I believe our actions over recent months have highlighted our determination, shifting the official cash rate from 0.25% to 4.25%. Inflation is no one's friend. Low inflation and the maintenance of it is the best thing we can do to the economic well-being of citizens of Aotearoa.
Thanks so much for that, Jessica.